Hey, how you doing? This is a follow-up video on a video that I did last, I guess my first video. So this is my second video, which is a follow-up of my first video. First video was a video about market manipulation and how it plays a part in the actual market cycle. So you may have heard of things like Elliott waves. You may have seen the market move pretty erratically, especially in the days of last days, last couple days, last week or two. The market has went from a definite upswing to looking like it's topping out and looking like it's coming back down. Very violent moves, high volatility. When I talk about volatility, I'm talking about the VIX. It's a volatility index. That is a good telling sign of what the market's gonna do. If the volatility or the VIX starts to rise, you can pull this up on TradingView, things like that. When the volatility starts to rise, then you're gonna have big swings in the market. Traders typically look at the volatility, they look at the VIX, and they say, okay, if the VIX is high, that means it's time to buy. Because that means there are big moves in the market. So if you're playing on the market going down when the VIX is up, then you want to buy your puts. When the VIX is up and the market is down, then you want to kind of buy your calls. You want to buy your shares. You want to buy your cryptos. You want to buy your coins. And then that is when the, I guess, price is going to swing in one direction or the other. So the market's pretty much like a pendulum. When it swings one direction, it's typically going to swing in the other direction as well. There are moving averages that kind of represent the equilibrium on this pendulum. So if the moving averages, they have different moving averages. You can set it to whatever you want. People typically set it to like a 5 moving average, a 20, a 100. They set it to a 50, 100. They set usually a short, middle term, and a long term. And that shows you when the shorter term moving average crosses the midterm moving average, then it's usually a change of direction. When the midterm moving average crosses the long-term moving average, then that's also a change in direction or a continuation. So you'll hear people talk about death crosses and golden crosses. That's what they're referring to. When one moving average is crossing another moving average, usually the 50 is crossing the 100. That shows high momentum moving in one direction or the other. So it had a slight momentum to where the first moving average crossed the midterm moving average. And then once that midterm moving average, once the fast one stays above, the midterm moving average starts to slope up. And once it slopes up, it can cross the long-term moving average that was probably moving down. So short-term crosses up, stays up, midterm starts to hook up, long term is still coming down, and once that midterm crosses the long term, then that's when you have something called a golden cross. That's when the momentum is starting to swing long term in one direction or the other. This can happen inverse, so if it's happening on the low side, if we are in an uptrend and you see all the moving averages start to cross in the downward sloping direction, then it can also be vice versa. So with this market manipulation, crowd psychology, the thing you have to keep in mind is that when the crowd thinks of a downturn, when the crowd thinks of volatility, they're thinking of slight volatility, slight pullbacks. It's not these slight pullbacks that are going to manipulate the entire market, that are going to make everybody sell. So you as an investor, you think in your mind, like, hey, what's going to be the point where I start second guessing my investments. Everybody says it's this. Everybody says it's great. Everybody says we're going down. What's going to be the point where I second guess my investment and I flip flop to the other side? Paper hands, lettuce hands, cabbage hands. If you second guess your investment and you switch, or you second guess your investment and you sell, that is, I hate to keep throwing out terms to you guys, but the market maker is looking for that. So once you get to a point where you feel so much pain in your position that you sell, and the market starts turning around and it keeps going up, and you think to yourself, this is just a short-term move. It's just going to move up just a little bit and then it's going to come right back down. Why would I buy back in? What the market maker is trying to get you to do is sell. That's why I want you to keep in your mind your conviction on the things that you have bought or the positions that you have. As long as you hold a conviction in these things, then you won't be shaken out. It just represents more of a buying opportunity so that you can buy more of these things at a cheaper price, or at the same price, you end up buying more. If that makes sense to you. It should make sense to you if you're an investor. If you're looking at this channel, if this series of videos is going to make sense to you, I would hope that you're an investor, and I would hope that you want your number to go up. That's really the only goal for most investors. So with my market manipulation, with the psychology of crowds, you as a market maker, if you were in the market maker's position, he or she, I don't know. If you're in the market maker's position, you want to inflict as much pain as possible to the investor. You don't care if they're an institutional investor, if they're a mom and pops, if they're just a recreational investor. You want to inflict the most pain to make them sell at the bottom and buy back at the top. As an investor, you would love to buy at the bottom and sell at the top, if you plan on selling at all. You really just want to enter as low as possible because your entry point produces the gains that you get. So take, for example, Tesla. The run that it had in 21, 22, that incredible run that they had, people just kept buying the top. And then buying the top again, and then buying the top again. And the only reason you can buy the top so many times is because it just doesn't go down. When something is on such a strong uptrend with such strong momentum, you pretty much just can't lose if you just keep buying. Every day you're buying, every week you're buying, you're just dollar cost averaging, making your average price, average buy-in price, go up and up and up. And as long as the stock is going up, or as long as the crypto or asset is going up in value, there's no problem buying the top. It's once that starts to roll over and starts coming back down, and the price and your moving average get inverted to where the price is lower than your moving average, and then you keep buying. If you keep buying, then your average will start going down. If you're buying on the way up, it's going up. Buying on the way down, your average is moving down. So when it has a nice little 20% pop, 20% jump, then you're faster to be in the profit than somebody that didn't do anything as the price moved down or as the price moved up. So with the market manipulation, the thing is about the market is, for you to sell, somebody has to be buying. For you to buy, somebody has to be selling. So the thing they want to do is they want to generate enough buzz to where everybody starts turning around. The market is catching everybody's attention. It's in the news all the time. People are talking about it all the time. You go into the gas station and the guy behind the counter is asking you about this thing, or you ask the guy behind the counter at the gas station, you ask them, and they're informing you on different cryptos. So that's what the market maker wants. The market maker wants everybody to look. They want everybody to pay attention. Once you pay attention, then you're more likely to buy. When you're asking questions, the big thing about most cryptocurrencies, Bitcoin, the running joke is that in November, December time, it's usually pumping on a 4-year cycle. So every 4 years, you go to Thanksgiving dinner, Christmas dinner with the family, and they know you're an investor in cryptocurrencies. So they start asking you. They hear it on Bloomberg. They hear it being talked about on CNN, talking about a ETF, a Bitcoin ETF, this and that, yada yada. So they start asking you about it. And as they're asking you and you're informing them about these things, people that don't know, aren't in the know, there's probably less than 2% of the world's population that has bought a cryptocurrency. So as they're asking you, they're getting more information than they do anywhere else in their life. So at the end of Christmas dinner, Thanksgiving dinner, they go back home, they sign up for a Coinbase, maybe they throw $100 in. You get enough people throwing $100 in, the market starts to kind of wake up. The market maker sees that, oh, we've got buyers at this price, so I'm going to move the price. If there's a lot of buyers and there aren't enough sellers, then let's move the price up so that we entice people to start selling. Once the price goes up, that'll entice the people that just bought to buy more. Now you have a perpetual energy machine where people are always buying and people are always selling. Once you get to the point where there is an equilibrium where either nobody is selling and nobody is buying, or the sellers dry up and the price has to move up, or the buyers dry up and the price has to move down to entice people to buy more. That is what moves the markets. The psychology portion of it would be them enticing you to do something about it. You hearing about it in the news, you seeing it on MSNBC all the time. They're talking about a Trump Bitcoin reserve, United States crypto reserve, digital asset reserve. Once they start talking about these things and people start getting interested and they say, oh man, I bought some of that in 2017. I did really, really good. I think it's about time for me to get back in the market. Once they entice enough people to get into the market, guess what's going to happen? The market's going to move. Who knows which direction it's going to move? It's going to move. That's the benefit of cryptocurrency, and that's the benefit of all of these digital assets, is that they move. This is not a blazed trail. Nobody has walked on the path that we're walking on right now. This is the Oregon Trail. It is scary. It is going to be scary. That's why I asked you to think about a price that would make you sell your assets. Think about the scariest scenario in the world. People say, oh, Bitcoin's going to zero. There's a price above zero that would make you sell. That would scare you out of your bags and make you sell, no matter how long you've been holding. Some people would sell. Some people would buy. I just want to make you the most informed person that you possibly can, to where the decision that you'll make in that situation is going to be to buy. It's going to be to increase, because you have such a high conviction in what you hold that there is nobody that could shake you out of what you have, because you already know what's going to happen. You already know what these are used for. There is nobody that could tell you anything other. If the price goes down from 100,000 to 12,000, there's a whole lot of people out there that would sell. My hopes in making things like this is that you understand the psychology, you understand yourself enough to know that when you start to feel that little tinge of fear inside of yourself, you're like, I bet there's a lot of people feeling this right now. And as they feel this, they're gonna try to sell. And guess what happens when somebody sells? There's somebody on the other side to buy. Who do you think is buying those? Who do you think is buying what you're afraid to hold on to? Who do you think is selling you the things that you're rushing in to buy because your emotions are so hot? Who do you think is giving you that? That's what I want you to put in your mind and go forward thinking. When you hold things, it doesn't have to be cryptocurrency. It could be Apple stock. It could be Tesla stock. It could be anything. It could be concert tickets. Just keep that in your mind. If you have any questions, comments, please leave them down in the comments section. I'll try to get to as many as I can. I'll try to stay up on what we're doing, stay current on posting. Be safe, invest smart. This is not financial advice. I'm not a financial advisor. Do your own research. Have faith in what you hold. This is Gabriel signing out.